Let's take a look at your market news. Arabile is standing by with that. Arabile.
Yeah, good afternoon again, guys. While the market itself seeing a lot of red following through from yesterday, Asian stocks fell, particularly on Friday morning following losses on Wall Street. That comes as fresh doubts emerged over the prospects for US-China trade talks and global growth outlook as well. Tokyo led the slump as well, while Hong Kong returned from the three-day Lunar New Year break, also in the red as investors reacted to negative signals from that US ahead of the crunch trade negotiations with Beijing. As markets slowly get back online, Tokyo's Nikkei lost a big 2% to close out at 20,333 points there. The Hong Kong's Hang Seng slipping 0.2% as well there, ending the day's trade at 27,091 points. The Shanghai Composite remaining closed for a public holiday. Heading over to the United States now, and Wall Street stocks sank on Thursday as worries that the United States and China would not be able to reach a trade deal by March the 1st intensified earlier concerns about slowing global economic growth. Now, the Dow Jones Industrial averaged 0.8% to 25,171 points. The S&P 500 lost almost 1% to close out trade at 2,706 points, while the Nasdaq Composite dropped 1.2% to sit at 7,288 points. It's been a negative day across the board. South Africa yesterday saw a big slump with its all share as well. Today seems to be a similar picture. A whole lot of profit taking, perhaps some negativity as Asia comes back online, perhaps feeding into the negativity brought forward by that US-China trade deal. No deal seems to be in sight, although hopes are, of course, still lingering in the market. The Brexit saga continues as well, with South Africa's currency loosening itself even further and weakening to around 13.64 against the US dollar. Let's unpack the exact numbers and we'll get into what's happened and transpired this week on the economic front. Very difficult to spot any green in that picture, isn't it? So certainly a whole host of red, even for the local currency, getting battered and bruised. A few stocks this week also received a bit of a battering, and some would say that it is, however, warranted considering the situation in which they found themselves in. Let's unpack things that have happened this week. MTN, the stock that just keeps on giving, but this time, bad news. It continues to fall as of late, and this time around, as you can see, the share price actually at 84.92 rand as of earlier this morning. It has fallen around 2.5% across the week this week thus far. And the reason I bring it up is because just at the beginning of the week, things looked a little rosy to begin with. They brought out a trading statement saying they expect earnings to go up around 20%, and that is despite the negativity out in Nigeria, of course, having had that 8.1 billion rand fine from the authorities on that front. That reduced then to just over $50 million, and they still had that tax situation of more than $2.1 billion as well. That has not been solved, however, and later on in the week, we saw the tax authorities and the courts even decide to postpone that case to March. So again, you're seeing a drop in that share price for MTN. So sadly, it's unable to continue any gains and lacking any momentum and remained in the doldrums, falling around 2.5% by close yesterday as well for the week. So that negativity seems to continue for MTN, but it certainly continues as well for Woolworths. And this counter seems to share a similar sentiment with a packet of chuckles, I thought I might add. The share price of Woolworths sits at 47 Rand a share. And the price of Chuckles sweets, which is 250 grams, which you can buy at Woolworths, of course, is 54.99 rand. The question I'll ask you is, which would you prefer at this stage? Would you rather buy a Woolworths share, or would you rather just get the Chuckles themselves? Of course, this week we also saw the resignation, the third resignation in 5 years of David Jones, CEO. That just means that a subsidiary of Woolworths has seen its CEO depart, hurting Woolworths a little bit further. The business makes up around 10% or so, if not less, of the entity. So it doesn't hurt as much, but they certainly aren't getting any bang for their buck. And one would certainly say that this counter is not worth a chuckle. Well, we have seen, of course, the important news coming out yesterday from President Cyril Ramaphosa. That State of the Nation address, certainly key with regards to Eskom, but I thought the economy was an element that he needed to touch on. And he seems to have done that, but perhaps not in a manner that may certainly help South Africa. He says that to stimulate growth in the economy and to build more businesses and employ more people, we need to find new and larger markets for our goods and services. Question is, you've already tapped into the likes of Asia, the likes of India, and of course you've got a few issues with regards to the United States, and you've got treaties and deals with Europe. Where exactly are you looking? Does the Africa Free Trade Agreement in itself offer that opportunity for President Cyril Ramaphosa? Was he speaking when he mentioned those larger markets for our goods and services being the rest of Africa, which is a significant intra-Africa trade deal? Expected investment in the oceans economy over the next 5 years, also estimated at 3.8 billion by government, 65 billion by the private sector. These are big numbers that certainly will help the fiscus, and we'll hope that indeed they do come to fruition, and we'll get more of an update on that. Above everything else, we must get our economy working again. That's the sentiment from President Cyril Ramaphosa. Can we get that right? We've continued to speak the rhetoric, and the talk continues to be spoken, but we need to walk the walk now. It's time for us to put things into action. Well, here's a country that decided to put things into action, and unfortunately, it didn't work out for them so well. A special place in hell for those who promoted Brexit without a plan. Harsh words there coming from Donald Tusk, the European Council president, really detailing that he will not be willing to open negotiations with Britain as they try to salvage a deal that would allow them to leave the Eurozone and still feel comfortable enough with trade agreements and their partnerships with neighboring countries as well. It seems to be going from bad to worse for Theresa May. That is a look at the week that was. A whole host of data, of course, as I mentioned, they're coming out. Even this week, we saw Saki's BCI as well coming out as well this week. So some sentiments coming through there. A weakening in South Africa's currency, perhaps that's just as Asia begins to come online. So let's discuss all of that now with Warwick Lucas from Galileo Capital. Warwick, thank you so much for the time. Let's perhaps start off with the State of the Nation address from yesterday. Any sentiments from you that perhaps felt it was enough? Or was it, however, one that just flattered to deceive?
I think the word I would be looking for in a speech like that really is necessary rather than joyful news. We had an initial Ramaphosa, everyone was excited at the change of leadership, that we actually had someone at the top who had a clue. But now it's a case of actually delivering, and I do believe he's an executive with the capability to deliver, but there's a lot of fixing up to do, and it's just process. No exciting acting stuff, just nuts and bolts, get it done. Knock over a domino one at a time. Yeah.
The question then becomes, yes, you split Eskom into 3, but now the further details, right, of how exactly that's going to work. What happens to the debt situation? Does that get split up into 3 as well? And even though it's going to be supposedly manageable, how exactly are you going to do that? How will you create these departments to ensure that they function properly and aren't just runaway sort of departments all on their own? Do you believe that this sentiment of splitting up Eskom is bound to help the company in itself, or perhaps lead it astray?
I think it must inevitably be positive longer term. First of all, it'll create a more focused management capability within Eskom, and secondly, it's going to allow for a variety of partnerships and a capability on the part of Eskom, which really was in many ways philosophically and managerially a dinosaur, not able to appreciate changes in technology and ways in which to respond to that. I mean, if we look, for example, at the issue of adding capacity to the network in future, well, we've seen what happened when Eskom added capacity on its own. It was a disaster. We had 2 great big power stations that have basically bankrupted the entity. So I think this is a very exciting development, and it'll allow South Africans more broadly to participate in this new electricity distribution.
Clearly a little more positive on that front. So let's turn our attention to the markets now. This week has seen quite a few trading updates come through. The miners have released some of their numbers as well with regards to trading updates, especially the platinum miners. It seems to be a little more positive with regards to that sector. We'll need a lot more from it, though, in order to pick up South Africa's economy too, won't we?
Yeah, I mean, look, amongst them, it's hardly a case of break out the champagne. It's just have a nice cup of water.
As well, yeah.
You know, because if we look at what actually improved, well, a little bit here and a little bit there. The whole platinum basket was a little bit better. They got a little bit of a ride out of the weaker currency, but clearly it's still a very tough environment for them, and we perhaps saw some benefits from really dire cost-cutting scenarios earlier coming through and proving that the companies are at least on a more sustainable footing. Now, we also saw in the case of Sasol, I mean, again, it was it was a very mixed basket there. I mean, operationally, they got a little bit of a kicker from a better oil price and a weaker rand, but clearly other issues there.
Is that still a good business, though? Sasol, that is. I mean, they've tried to diversify their business, not just making oil, but oil is still a very large proponent, and with the oil price not going anywhere, really, they're bound to suffer, aren't they?
Yeah, look, I mean, basically it's a good business. The market absolutely hated Lake Charles project when they announced it. It's continued to hate it, and any bad news has really been thrashed. And in the case of the news that we have here, well, we saw the share price basically lose about $1 billion in cap there, and with good reason. I mean, the project cost has gone up $500 million. You've had an EBITDA or earnings swing of about $300 million, and it's also pushed out the timeline 6 months, which means your cost of capital has gone out. But it also goes to show how useful the market is in actually disciplining big companies that start straying.
Yeah. Woolworths share price or a packet of chuckles?
Packet of chuckles.
Definitely, right? Surely. They've just lost their third CEO with regards to David Jones, that is. That continues to not offer enough value. Yes, they have a split business with regards to clothing and, of course, their food brands, but it doesn't seem as though they're managing this business in a way that'll take them forward, and they just keep losing market share.
David Jones it's a dated department store model. I don't see that they can add any value. I certainly don't see it adding any value on Woolworths management time. It takes them away from what they're good at. Frankly, I can't wait to see them get rid of it.
Yeah, I think certainly the ideal question here will be when and not if you ask me. MTN also suffering as well this week, early on in the week, offering some good news with regards to earnings, but then sadly their court case being stalled a little bit further on. One would say that the business itself is still good, but what is happening out in Nigeria is definitely hurting.
Well, it's certainly messy. Look, let's remember that Nigeria is a particularly lively place at election time, and elections happen on the 16th of February. So that's very close, and the kicking out of the court date means that it's on the other side of elections, and there's chances for tempers to cool and perhaps for some gracious backing down, etc., etc. So we can hope for the best on that one, I suppose. I mean, as far as MTN management go, look, their trading update was really very flaky in that it said, well, probably 20% up off a very low base. Well, that's hardly any guidance at all. But on the other hand, MTN management are also on track as far as they believe in terms of listing an MTN Nigeria in about May, and I think that'll be very positive news as well. Yeah, all good news to all things to look out for, certainly. Warwick, appreciate your time, bud. Hopefully we'll do this again next week, of course, and unpack that market picture there. Warwick Lucas from Galileo Capital bringing us a look at that market picture. We'll give you more market news right after the short